Hey, how's it going? Welcome back to another trading video, trading recap. We took two trades today, one in the AM session, one in the PM. The first one resulted in a 3.6. The second one was a 3.9. The one risk reward ratio. I'm gonna go over my analysis on both of these trades and why I took them to begin with. Coming into today, I'll be fully transparent. I woke up a little late, around 7:30, which is 10:30 Eastern time. So I'm looking at price here, and I see that it had pushed up. Well, first it was consolidated, made this move down, right? Made everybody want to go short here. Went long, it trended upwards, took these people out, right? Making people go long here. But there's also an order block back here. Here, mark it out for you guys. You consider the whole thing an order block, but I just like to use the displacement candles. So I use that as confluence to enter long. After I saw this displacement breaking structure to the downside, leaving behind this inefficiency, I entered off of this inefficiency here. Price retraced into it 3 times before hitting the London lows, which is our second TP. Went a little lower in lunch. However, the London low was my final target, so I took my money and ran. No need to be too greedy. Okay, so these vertical lines here is lunch hour, correct? I don't look to trade during lunch hour. Yeah, this trade went into lunch hour, but as long as you're not placing trades, that's all that matters. As long as you're placing trades between that 10 or 11 a.m. Eastern time, you're fine. But yeah, lunch hour, I don't even bother looking. It just consolidated for an hour. So here comes PM session, right? Which gives us eligibility for entry. I marked out these lines here so you can see the highs and lunch lows easier. So we get 1 p.m. candle, right? Price is doing its thing. It displaces the downside, sweeping the lunch lows before displacing. It displaced breaking structure to the upside, leaving behind this inefficiency here. I entered off of that inefficiency. And when I looked to go long, I kept in mind of this 5-minute fair value gap here. So I marked that as an inverse fair value gap to see if it would respect it. And it did respect it. All that means is that price did not displace once entering that fair value gap. Let's say it would have retraced here and then displaced, right? Making a new low, breaking structure. Then it would validate the fair value gap, not making it an inverse fair value gap. But since I was going long, I wanted to see it hold and, take out higher size of buy side liquidity. And price was chopping around. Here, let me get rid of these now. It's a little easier for you guys to see. Price was chopping around before it made its move and hit this. I think I have a 3-minute. Yeah, it's a 3-minute high. And it kept going to our second TP, which was the London highs. So price would have delivered beautifully. Would have been a nice 6-1, but it was getting late in the day and I didn't want to look at the charts anymore. So I took my money and ran. And yeah, that concludes those trades. Thank you guys for watching. We also had consumer confidence. Oh, I lied. That was yesterday. We had final GDP and unemployment claims today. Then we got price index and consumer sentiment tomorrow. So we'll see if we take a trade. Anyways, thank you guys for watching. Take care. See you guys next one.